For T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So checking in on world markets, Europe gives back most of its gains. Yesterday's gains, China, not too much action there overnight. Japan down about 1.1% as the yen strengthened. Seems as though world markets are looking a little tired. Are they just taking a breather?
You know, everyone's trying to find reasons why, but I just think it's kind of the sluggish price action. We've just had big moves. It's midsummer. I know with China, you know, they're trying to put some kind of floor on GDP, so there's been talk that 7% is where they're going to draw the line, but I don't know how many people are that impressed there, so that rally's stalling. Europe, I think, had good news, but it's also just a little sluggish. But and in Japan, what do we talk about?
When it was 20% off its highs,
and now 20% off the highs. Now it's only like 4 or 5%. So a little pullback in Japan, also down 1.1%, is pretty much in stride.
What would be healthy there?
I would think, a pullback to the 21-day. If you look here at the EWJ, we've highlighted this many times because it's been in play. Here was that outside day, May 22nd. Here was that 20% pullback right above the 200-day. Here was your first move. Here's your higher low. This one, it broke the trend line. And then right around here, it started to just roll over a little bit in front of the old high. So I would say 1169 would be a good spot, perhaps, to hold. And if you were to see a pullback to 1143, I think that's where you put on some more Japanese exposure. And that's when everyone will probably be talking about a double top. That's probably when you get back involved, once it's a little bit cheaper in prices.
Well, we also saw rates pop up again yesterday. We've talked a lot about Scott's thesis of going long the TBT. Let's check in on that thesis.
It's interesting because recently this year there's been a lot more, I would say, performance for being in the draw. You try and be extra cute. You try and try and maneuver a little bit more and time things, and sometimes you time yourself out of it. Just like with me, I've been in and out of the TBT, but I've said keep some in the drawer because rates should be higher in the next 6 to 18 months. It's just how they get there. And if you look at the TBTs, you'll see that we've been following this trend since late April, and where we've been holding the 21-day moving average. So with that said, I remember buying some in here, and I got stopped out. I'm like, you know what? Let me, we broke the 21-day. Maybe we'll see the 50-day. And what happened there was it was 1 day below, up above. Now it's back in the space. So I'd say new type of channel, pattern here where it's in a channel. So if you're still in it, great. For the next move, through highs would be through 77.45, and ultimately, again, I do think rates will be going higher. So this is something to keep in your portfolio. If you want to keep it in the drawer, keep it in the drawer and not watch it because it trades a little erratic. If you want to trade it, just make sure that maybe you're not so tight.
Well, we did get signs yesterday that our markets could use a rest. We talked about the ascending channel in the S&P yesterday, which seemed to start to resolve to the downside.
Yes, and anytime you have a massive move like we've seen since November or even the past few years, everyone's looking for some kind of reason to sell. And with that said, those sell-offs have been very short, very muted. So I tried to isolate a pattern that if you were extra cute and extra active, maybe a way to make some cash flow short or to even take off some risk. And if you look here at the SPX, you will see that, first of all, the last move that we had in April before that short-term top was an ascending channel, right before that outside day on May 22nd. Okay, from there you had a 6% move to the downside. So with that said, you had your bounce, your digestion. This is when we cleared this little downtrend where we broke the series of a high, lower, high, lower, high, and then you had your move up, and now we've been in what? Another ascending channel. So if you want to take a closer look here, let's just bring this down so you can see it. Yesterday, what happened that was a little different? We actually went below a previous day's low, which was 1691, and closed below it. So right there, that could have brought out some sellers. Today, the futures are down a little bit. You have yesterday's low as a point of reference, 1682, and then you have the 21-day here. I personally would love to see a pullback to the 21-day. That would help me, feel a bit better about buying a dip. But in order to do so, it's got to stay below 1687. So, I think at this point, if you took some risk off, let's see, what it leads to. But again, it hasn't led to much lately, but you don't have to know if you're in a position where you're a little bit, lighter on your feet.
Well, that wasn't the only signal that we got yesterday to take caution. The Russell got hit hard, and we often talk about the Russell as a key indicator of market direction.
It's relative term, hit hard. It just was something different. So when things are different, you want to add them up. But yesterday, being hit hard was the thesis there. You look at this channel or you look at this chart, pricing and timing, right? Here's that downtrend where we broke above. This was your historic high. It went to highs well before all the indices. And you're talking about 10 to 12 days of upside. Here is your ascending channel. So if you want to take a real close look there, you'll see here too that it broke to the downside, okay? And this is a potent day. You don't see a day like this, in the last 10 sessions. So when you have a day like that, you never buy it, or at least to me the first time. 104.25 was your spot to take some risk off. Here is yesterday's low. That'll be your new action area. If it were to trade below yesterday's low or not reclaim it, let's see if we can get a move to test this gap at the 21-day, which is around 102, which I think at this area, I think it's a better buy than a sell, but we got to get there first.
Another flashing caution sign, the Homebuilders. They've been lagging the market for about the past month or so, but continue to show relative weakness yesterday with more than 2% of losses.
Yes, and if you look at this group, you'll see a blaring difference. This is one of the groups that did not make 2013 highs, and this has been a leadership group. So this is something where you have to take a little note. Look at the high here that was put in May. Then you have a lower high, another lower high, and if you take a closer look, you'll see this inside range, okay, that wound up getting broken to the downside right here. So some people made some cute money short yesterday, closed on the lows. Here's your new point of reference, yesterday's low. And then, stays below that, you have 29. So overall, this group has been out of play, and a lot of the stocks in this sector don't look so hot the way they were looking, months back.
And the transports as well broke to the downside on Tuesday and shed another more than 1% yesterday.
Yeah, and this, this actually started leading us lower before, some of these other sectors. So if you look at the transports, which people think is important for the Dow, it again just broke the 8-day. It's going to be coming into the 21-day. Maybe you look at it to see if it can go green today. But ultimately, I'm not saying this is a breakout failure, but things are just coming in slightly. So again, if you're trying to be cute and make a little cash flow, make sure that being cute won't make you ugly if you don't buy it back, and if and these things continue to hold trend, which they have been.
Well, meanwhile, earnings continue to roll in. It's been a story of haves and have-nots, but a bright spot was Facebook, beating on revenue and earnings and impressing with mobile. That was a key thing everyone was watching, and you actually used a cap spread here. Yeah,
I used a call spread instead of buying the stock. So it just goes to show you, like I said before, sometimes being cute is not fun, and being an investor is better. Like it kind of takes its turns. And for a while, investors were feeling it, right? This was just slowly grinding down. I put this on my 2013 thesis as one of my longs for the year, and I've been getting a lot of grief over it over the course of the past 3-4 months. Red Dog, you keep saying the highs of the year aren't in. You keep saying this, you keep saying that, and sometimes it could get to you a little bit. But anyway, you look at this chart, and you'll see what I thought was building earlier, which took time. This cup and handle pattern, where here's your cup, here's your descending channel handle. Recently it started acting better, and I've been long it here and there for the past few sessions as it started to get above this 25. But for me, I don't really take stocks into earnings, so I chose a call spread. Unfortunately, you do a call spread, it caps you out, which I figured maybe it would get to here. That would be my cap out. But meanwhile, it's back at 32. So all in all, here's your resistance, 32 to this is 33. This probably pauses here. I would say do not chase and buy it right here, but let it open up. Let there be a big gap, go sideways, and then maybe we get a better setup to then fill this gap and go up. Because if you remember, I did that segment with Kramer. I said that at some point this year I would see it filling the gap. It's just a matter of when. And right now it seems like it's in motion for that. And hopefully, if you have it in your portfolio or in the drawer, you have a smile on your face today. You found a friend.
People also have a smile on their face today, I'm sure, about BIDU, which BN guided up. It actually sent shares up more than 13% in after-hours trading. And the stock has been strong lately, so do you think this should be back on the go-to list?
it started to get back on the go-to list like a week and a half ago when I'm like, look at the strength here. And I play the hard money. You just call me blue-collar red dog, you know, grinder, grinder, grinder. I don't get any of these freebies, but you know what, I don't take the risk, I guess, for it. So, you know, that's part of my process. But if you look here, BIDU started waking up right around 95 when it cleared there. Then it got frisky. Then you had that gap up on that, you know, news of the acquisition. Closed strong ahead of the earnings as if somebody knew something there. You know, hopefully, you know, they did. They don't get into any kind of trouble. But anyway, with that said, you know, we are opening up higher. You know, let's go to the weekly chart. It's easier to see. You know, stock's been out of play. It's been in this, you know, pretty big downtrend for a while, and it's now waking back up. Okay, so this was your micro downtrend that it broke, you know, for traders recently, and now more of a macro. So overall, it'll be good to have this back in play with, you know, technical action. And you know, you always want, you know, stocks that move in the game technically, and this was a great one for so long, and now maybe it's, you know, back on the map.
Well, Amazon has been a rock star, and it reports after the close today. Expected EPS is 6 cents. The stock has pulled a bit off its high, so I know you don't typically take stocks into earnings, but could that be opportunity there? Yeah,
at least it's not like fully priced for perfection, where if it's at the dead high, is it better friggin' be great and guide higher for it to go? You know, this has been a calculated play. We've talked about Amazon, you know, and if you look here at the chart, you will see, you know, this was one spot that we talked about at 272 for a nice trade, gave you that nice 52-week high trade before earnings, which is always nice when it went above 285, and now your recent pivot is right here. Okay, that's 309. So I would say after, if they do come out very strong, and lately, you know, remember the last few quarters, their earnings weren't great, and they got a pass. I don't think at highs they're going to get a pass if it's not great. Then if they come out and beat and guide up, here is your pivot. Above 309, you'll see a potential squeeze, and who knows how far it lasts since it's at historic highs. If it does miss or in line, you'll probably see it, you know, flash and sell off quickly. And make sure, you know that sometimes, you know, like if you look at even like Google and Netflix, which were really strong, had good reports, but they weren't considered enough, you know, you then were able to buy a dip, and that dip comes in, you know, 285 right down, and then even closer to 272. So, you know, I would say go in this report with levels armed, so you could trade it after hours based on the report. And if you're looking to, you know, if you're looking to be involved, you know, prior, you know, just make sure it's some kind of option strategy. And for me, you know, I'm unfortunately, you know, maybe I need to walk underneath a bunch of birds because, you know, I had the straight calls in Apple, which made a little, and then a call spread in Facebook that got capped. So, you know, the problem with Amazon is there's there's premiums, there's big premiums. So you go and buy calls, it could be up $20 and you might make peanuts. So sometimes, you know, having a spread helps finance it. So it's up to you. I think, you know, that it's set up for higher prices versus lower prices, but, you know, we'll see what happens after the close.
Also after the close, StarBucks. Expected EPS of 53 cents. It has seen some selling the last few sessions and broke below the 8 and 21 days. So what will you be watching upon the report here?
I think, you know, you look at the chart here, it's been in a strong trend. You know, it came back real quick. It just started to break down, so maybe some people are getting a little cautious on the numbers. So I think, you know, a solid report gets it back, you know, back to the upside. If you look at this trend line here, you know, a weaker report, and, you know, you want to see if it would be holding above this 65. And at this point, it's not priced for perfection, but it needs a strong report to stay in the game.
ZNGA reports after the close tomorrow. Expected EPS is 7 cents. And this stock has been acting a little bit better lately. It has reclaimed all key moving averages. So how much does ZNGA need to impress?
I think they just got to show, you know, some kind of revenues and earnings, and I think people are more excited about the new CEO from Microsoft. So I don't know if he's going to have like the time to make earnings. Maybe next quarter will be the quarter, but I think if he talks positively and talks about, you know, has a good conference call, this, and that, I think 365 is your spot. You look at the chart here, it's still almost like a call. You know, it's like, I know Sperling has been buying this. He thinks it goes a lot higher. You know, here is, you know, this level going across. This is like 365 to 370. You know, I guess if you do take some stuff into earnings, maybe take a little bit, because who knows if you get it after. But really, it's going to have to clear and close above this 373 in order to fill this gap, and this gap gets filled up to $5. And if you look, you know, at the monthly chart, go to the weekly chart. Look where it is. This thing has been battered and bruised all the way down here. And there might be a little optimism considered, not that it's so tied to Facebook anymore, but, you know, Facebook is back in vogue, so maybe some of these, you know, the whole thesis around the social networking stocks will pick up a little.
All right, let's do some quick hits here and talk Apple, which got a boost from its earnings on Tuesday and held most of its earnings gap since. Could a composure change be happening here?
Well, it's trying. Okay, so yesterday was step one. We talked about step one, hold the majority of a gap up, and it did. Okay, so if you look at the chart now, you'll see that here it is, into this small trend line here. Okay, take a closer look. What'd you have going in? You had this double bottom around 385. It's coming in right here. Let's go to the daily chart. You can see it a little bit better. And this is yesterday's bar. Okay, not that much action intraday. You did have that pullback off the bat, and then it went to the highs, but then had no traction. So I'd say the longer it stays above 435 and keeps this gap open, the higher the probability that it takes out that downtrend. For now, I'd love to see it go positive. The futures are down, and if it starts getting above yesterday's high of 449.59, you'll see some traders go after it for some follow-through. Question is, does it need a few days of rest, or does it just go on day two? So, at this point, though, it's in the game for better prices, and this downtrend, if you want to take a look at it here, is right there. And I'd love to see this thing back at 470. That would make trading a little bit more interesting.
All right, and Netflix has seen some selling in the past few sessions. It's digesting its recent big move, closed down about 3.6% yesterday. Is that opportunity?
I think so. I think we're getting close. You don't get that many chances to buy the best stocks on the cheap, and the earnings report was good, except for it was priced for a huge beat. So you look here at Netflix. Since the highs here, it's pulled off. The high was 270, so it's down about 30 points from the high. Here is yesterday's low, so I would use that as a pivot. Whereas if it can get back above it, maybe you buy some 240 is a nice area. I guess there is a small chance that if it does go below 240, maybe you draw this trend line here, and it could see this 231-ish. Okay, which if you remember, the buy price was right through here. It was through 227, and then this little peak here was 235. So I think anywhere between 231 and 235, I'd be looking to, if you're short, cover. Good luck, you stole something there. And if you're looking for a long entry and you didn't take it into earnings because that's not what you do, then this would be a good spot to look to buy the dip.
And amid weakness, we always look for relative strength. LinkedIn was a stock that showed it yesterday, saw decent gains of 1.5% yesterday. What do you think here?
Well, I'm not exactly sure where it's indicating now with Facebook, but this has been a strong stock. This one was the cup and handle pattern that we talked 2 years ago to throw in the drawer. Could have all the ingredients of a double, triple, quadruple, whatever it is. And you look here, it's still holding up very well. Short term, I think earnings aren't until like next week, so you don't have to worry about it yet. It's holding higher. If it were to start breaking above 198 to 200, I think traders will take a look at it. If someone's short in there and they see what just happened to Facebook, they probably want to cover. Unfortunately, they had a lot of time and they probably should have covered way back when. But remember this pattern, and guys, start looking at these patterns because they repeat themselves. You could actually see more in the weekly, where you had this really nice cup and handle pattern, which is the reason why we liked it, which new issues tend to have when they're in accumulation, phase. Now is here, boom, boom. Okay, like booms. And then here was your channel, and then this is when it broke above it. Okay, so this is an accumulation pattern that we just saw also in Facebook that was a little sloppier, but here it is, and there it is now. So this is how you uncover huge winners besides just trades.
And Boeing slipped a little bit yesterday to retest its 8-day. What do you think of the composure of this one? Is it just taking a breather?
Well, anytime you have a really good report and you gap up and it gets sold into it, it shows you that it needs a rest. So Boeing has already exceeded most of my targets already. So at this point, you look at Boeing, and hopefully you took some profits into this big gap up versus chasing it, which we talked about, I think, in yesterday's call. Trend's still up. I think recently, any time you get the 50-day, it's been a buy, but typically it's been following the 21-day. Here is, your gap up. It couldn't hold the momentum level, and now the question is, will it hold this little area? Because if it starts breaking below yesterday's low, chances are you get some corrective activity, and then I'm sure at some point it could be a buy, but at this point, I think it needs a rest, and I would just avoid.
But there is stuff to do out there, I think, is the moral of the story, right? What will we be focusing on today?
I want to see, I'm not really going to trade Facebook because, some people will probably try and short it a little bit versus 32. Maybe that works. I want to see if Apple has continuation. The markets, I want to see if, we're down today. What kind of down day do we have after breaking those ascending channels? It's the end of July. I feel like so many traders out there are so tired right now. You're tired now, take a break, because I have a feeling the fall is going to be super busy. At this point, earnings season, we're almost through the peak of it, so we could start seeing less volume and thinner trading. So at this point, I would just take some time to yourself, measure your commitment to the move. Yesterday, not a bad time to take off some risk. If you did so, you probably feel a bit better about it today. The question is, was that it, or is this morning it, or do we lead to further downside? You have the 21-day, you know where the 50-day is, you know what's been leading. So connect the dots if you want to connect them. If you don't, go to the beach, go to the mountains, and recharge your batteries.
And happy trading. Have a great Thursday.